So just stay alive, okay, to the possibility of new information coming into the market. So this is okay, what was happening right up to 12 o'clock. Okay, the position was the same. 12:30, okay, it was the same. By 12:45, it was still the same, and by 1 o'clock stayed the same. By 1:30, notice, okay, what happened. The entire position, okay, had shifted. So 25,200, which was the dominant gamma wall at that point of time, where all the short volume, okay, was built in, had shifted into 25,150. Had shifted into 25,150. Now, what did this shift tell you? The shift told you that people were expecting 25,200, okay, to be the close of the series. That information which the market, okay, had built in yesterday and today in the morning has shifted now. So it's no longer expecting 25,200, okay, to be the closing point. It's now expecting 25,150. Is this final? Absolutely not. It's a probability math. Okay, the market is still open and it's only 1:30. There are 2 more hours to go. And eventually, okay, what was happening is that these traders, okay, were adjusting positions. Now I'll walk you through, okay, how the positions were adjusted, etc. But finally, okay, what really happened as the market progressed, the gamma, okay, came down, okay, into about 25,100, and we had a close which happened exactly, okay, where the market, okay, made those changes to be right. Now the reason I focus, okay, on this chart, and you need to understand why this chart is extremely important, because what we look at in this chart is the market's assumption of where it would close on settlement day. Now, this is not based on some price derived factor. This is based on positioning of the market, existing trades taken in the market. So I'm not, okay, doing a calculation based on some quant or some random probability analysis of finding out what the market is expected to do. What I'm doing instead is working, okay, with the existing positioning of the market, where these positions are expecting the market to go at. So I want to be very clear, okay, in this understanding, because a lot of people, okay, when they come into the world of gamma, they start looking at it in terms of probability outcomes, and then they'll use statistical models to arrive at a range or a ratio or an expectation of where the market is going. We don't do all of that. We instead, okay, focus, okay, on what the positions of the market are saying, and wherever, okay, this position shifts, the gamma zero, that is the expected price of the close. Ideally speaking, in an ideal world, it should not shift at all, because the gamma zero is where the position where the market is expected to close. But hey, data keeps changing in the market, new information keeps coming in the market, and some traders close positions. Some traders, okay, who are profitable in that straddle, like this 25,100, 25,200 straddle, we were into this 25,200 straddle all day today. So let me just bring up that options table. So this was a very good trade for us in the morning today. All of us, okay, in the room, okay, had gotten into this 25,200, and we had gotten it at about 80 rupees today, right? Early in the morning, that was, okay, the price, okay, we got in, and we saw, okay, price dripping. It went up to about that 70 rupees, and then, okay, it spiked up to about 90 rupees. And then there was a point at about 45 rupees. So it went up right up to about 40 rupees. This was the point at which, okay, the depok shifted. So just zoom in on the left. This is that 25,200 strike. So we opened up, okay, around 80, and we all got ourselves, okay, because of the gamma factor. But right around over here, at about this 40 rupees, you will see this white line shifting lower. Now, what is this telling you? Right around over here for this 25,200 straddle. This was 40. This is the time, okay, we closed our position, because we knew, okay, that this move was done. And we were right, okay, because, okay, the MFlow, the DOI, the MFlow, and everything, okay, went red, and people, okay, started, okay, trading out of positions out over there. So what I can do is, on the panel controls, we had the MFlow put up. right? And this is the MFlow, okay, I've added. So somewhere around here, we had this very big spike, which came up in this strike, and virtually, okay, no greens, okay, got added. So all of this money had started, okay, moving out, and this was no longer viable to hold as a straddle into the close. Eventually, it went up to about 87, didn't cross, okay, into yesterday's 120 zone, but still, this was an exit signal, okay, which had got triggered, okay, around this price of about 40. Right, so we use this, okay, with the MFlow indicator these days, because the MFlow is a powerful tool for us to understand the flow of money. The flow of money stopped coming into green from this point when it spiked up above the depot, and it crossed above VWAP, and all of that money, okay, had shifted in. Right, this was that changing information which came in, and the net result of this was the impact, okay, it made on the order flow chart or the instrument, okay, 25-200 PE. So if I just quickly, okay, plot to the 25-200 PE, this is the change which the market, okay, was forced to do later in the afternoon around that 1:45 p.m. Right, so somewhere around here, a lot of these greens, okay, came in, and the market, okay, started, okay, moving up above the initial balance. So all these zeros and all these greens, okay, were telling you that there was a liquidity crisis around here. So every time, okay, we see these zeros, we know, okay, that there is a lot of stop losses in the market. And if you've been, okay, to the ECOS content and the training library, you know, okay, that these are what we call continuation patterns, and they become stop losses, okay, for a future trade in that direction. So we were expecting this to be support, and the minute, okay, these came in and all this covering, okay, which had happened over here, this was a signal, okay, that you had to get out of that 25-200 PE, and this eventually, okay, moved up all of this, okay, closed into the final closing minutes of the day. This put pressure, and this is, okay, what the gamma of the market, okay, was all about later in the close. Right, now just to back off and come back, what we are looking for in the gamma chart